In this lesson, we're going to talk about something that you already know how to do, and we're going to tweak it. So in posting to T accounts, that's something that almost every instructor does in accounting. It's faster, it's quick, and then they usually move on from manual posting and you never do it again. In fact, the first time I taught grade 11 accounting years ago, I had to reteach myself a large portion of the accounting cycle because you don't really do it after grade 11 accounting. It's just too time consuming. You really focus a lot on the journal entries and the financial statements. So anyway, on that note, moving on, posting, what are we going to do? First thing we have to do is we have to talk about account numbers. So if you haul out your chart of accounts, you will see that down the left column are some numbers. And all you really have to remember is that the number of digits in an account number is not important. Big corporations will have, 6-digit account numbers or more. Most of our exercises will have 3. What matters is the number they start with. So assets start with 1s, no exception. Liabilities start with 2s. Capital in your drawings accounts will start with 3s. Your revenues always with 4s, and expenses start with 5s. Period. Now, if you think you're going to have a lot of expense accounts, then obviously don't number your first one 501 and your next one 502. You need to leave space in between. So you'd go 500 for your first one. Next one would be 505 or 510. So go up by 5s or 10s when you're numbering accounts. So as you can see, all of these accounts are numbered. The good news is, once you get the knack, or even if you don't get the knack of numbering accounts, if you're given an assignment where the accounts are numbered, you no longer have to think about how to order accounts because you put them in numerical order by account number. When the accounts are in order by account number, they are in order by the order of the chart of accounts. That's how it's done. Next, because as that just said, accounting used to be done by hand. You had a journal book and you had another book for every account. This is a proper ledger account. So in the old days in a book, you'd have a title for each account. It would say what the account was, what page you were on in the book, and the company's name, of course, is at the top. You have a column for the name of account, you have a section, and the number that I was just talking about, account number, goes there. You got a column for dates, a column for particulars and information about the transaction, a posting reference that tells you from where it came in the journal, some reference to a source document or reference to a journal page, and then a column for the debits and credits for the transaction. You then, this is different, you keep a running balance in your account. Instead of just totaling at the end when you're done the exercise, you keep a running balance. Obviously, a real business needs to know the balance now if it has to look it up. And then you have this column, which refers to the balance here. Quick demo. Let's take these 3 transactions. So our first one is starting a business by injecting some cash, and I'm just using a generic capital account here, buying supplies for cash, and then earning some money for cash. So let's look at this first one. October 1st, cash debit $1,000. If this is the cash account, we would put in this information. Most of the time I have you ignore this. You'd put a cash. A typical number for a cash is 100. Next, you put in the date, October 1st, began a business. This is so time consuming, I am never going to ask you to put in this description here in this column, in the particulars column. But you will need to put in the posting reference. And that refers to what page this transaction came from in the journal, not to this account number. Right? From the journal. You then put debit, $1,000 for a cash deposit, and that gives a current balance in the account of $1,000, and that is a $1,000 debit balance. The last step, don't forget it. You're going to lose little technicality marks. Go back. And in the posting reference in the journal, don't put a check mark or something. You put the account number where this was posted to, and that was account 100. If someone got to the journal and saw just this, they would know you've posted this line, you've gotten this far, and you have not posted the rest. That's why it's important. Don't just go through and put all the account numbers in and then not post them, or only post some of them. That's bad, right? Also, if you have an exercise or an assignment that does not ask you to post, there should be nothing in this column. All right? Don't forget that, because there's a couple instances when I do that. And I will take a mark off if you don't do that. Like if you put in these numbers and you haven't posted and you weren't asked to post, or the computer didn't post or whatever. All right. So line by line. Do not go and look for all the cash ones either. That's how you make a mistake. Go line by line. Next, capital account. Here's the rest of the transaction, right? Now we have to credit capital, $1,000. So we go to the capital account. Notice this is account number 300, capital. October 1st, same transaction. Again, don't need this. You will put a posting reference to the journal on page 1. We'll credit $1,000 into the account, and the balance is now $1,000. And that's a credit balance of $1,000. And so on and so on and so on. Then we put in the reference where we posted this to. It was account 300. Into the supplies account, bought hair goop, debit $500. Came from page 1 of the journal, $500 debit balance. Next, posting reference. This went to account 110. Cash, credit of $500 to buy these supplies. So we go back to the cash account, which remember we had a $1,000 balance in it. So we buy hair goop. It came from page 1 of the journal. That's our source reference for this transaction. Credit $500. Notice our balance goes down. So this column is an improvement. We have a running balance so that we always know how much we actually have in an account. Pretty critical, especially for something like a cash account, right? That is something I should put out because this is where you'll make a mistake. See how this says debit, but it's a credit transaction? Remember, this column refers to the balance. So if you had overdraft and you went below zero, say, in your bank account, because some banks let you do that, this would be, it'd be like a negative number. It'd be like, say, negative 100. You're in the hole, but you don't put negative. You don't use negative numbers in the books, not in the journal or the ledgers, right? You would put 100, but it would be a credit balance in your cash account, which is called an unusual or an irregular balance. That's how you would show that. So this would be credit 100 if you were in the hole $100. So 100 posted. Last couple. Cut hair, earned $50 revenue, came from page 1 of the journal. Debit, we're now up to $550 as our running balance. Then we go fees earned. We'll go to the fees earned account after we have put our number in. Go to the fees earned account. October 2nd, credit $50 of revenue. Credit balance 50, boom, back. Put in our account number of 400, and we're done. Okay, that's all there is to it. So here's our cash account again. So if this seems all new, it shouldn't. It should be pretty familiar. It's just regular posting. The only difference is the account is complete. It's much more formal, and you have the benefit of a date, a reference of originality, where it came from, and a running total, a balance, so that you know what's in it. Otherwise, this should all be pretty familiar, right? This is just a T account. It's just a fancy T account. That's it.